What's up, guys? Welcome back to the channel. In today's lesson, I will walk you through my trading strategy. I'm going to be teaching you the strategy I trade as well as the strategy I teach to students I have in my VIP channel. So this is actually a VIP content. Last week, I released a VIP content, and today I'm also sharing a VIP content. Okay? Get ready because I'm going to share a step-by-step guide that will transform your trading strategy. I'm going to guide you into unlocking profitable trades. You're going to know how to maximize your return in the market and as well as achieve financial stability. You're going to understand how to follow smart money strategy easily. That is having a step-by-step approach in the markets. Now, by the end of this lesson, you'll be equipped with confidence, finding good trading opportunities, and as well as achieving your financial goals. If you look at the price chart, you're going to see that the pair we're actually looking at currently is GBP/JPY, and this is on the 1 hour time frame. When I started, I said I'm going to be sharing the strategy I trade. What I'm going to be sharing in this lesson is the strategy I trade in the financial markets. And another thing I need you to understand is that this is the same strategy my students approach the market with, okay? I and my students, we approach the financial markets with this same strategy. So let me show you something quickly. This is I and my students having a meeting where I broke this particular price chart down. So take a look at it now. Offered exact same price action where it sweeps liquidity above this high and went ahead to mitigate a higher time frame key level. Now having that reaction. So we're going to look to get involved from the 2 hours time frame or possibly the 1 hour time frame. So let's see the 1 hour time frame. 1 hour time frame actually allows us to refine our zone. Okay, it allows us to refine our zone. So this is our zone. Try to measure the zone. How many pips? It's about 95 pips. It's actually very large, even on the 1 hour time frame, but it's a good zone and we could consider trading from there. Another thing I can actually spot from this area is that we have another point of interest, which looks good right here. Okay, this area looks good, but approaching tendency confirmation is going to be nice. Now, I hope you saw when we were looking at the market. Firstly, we were looking at this particular area. We saw a good trade opportunity right here. And lastly, we looked at this particular area. Now, let me give you the step-by-step guide, which is going to help you trade this particular strategy. This video might take a little time. I might take my time explaining stuffs in this lesson. So it's important you watch this video to the end. Now, if you're interested in understanding how the institutions trade, you want to follow institutional footprints, this is the channel you have to subscribe to. I'm Solomon Wisdom, and here is Born to Trade. On this particular channel, I teach about smart money concepts and how you can find consistency and become profitable in the financial market by just following smart money strategy. Now, when we talk about smart money concepts, everyone who trades smart money concepts understand market structure, because market structure is actually what is going to help you understand how to trade in the financial markets, understand the institutional order flow. Now, from understanding that, you're going to build your own bias. Now, if you come to the market and you discover that price is moving in this particular way, that is, price is reacting to the upside this way. Now, this simply explains that price is in an uptrend. You understand that the institutions are moving price to the upside, and if you are asked to read the market structure, you see that price break this high after it prints this low, reacted to the upside. So this is a valid break of structure. And when you identify a break of structure in the market, you're going to anticipate a pullback. Now, when price is pulling back, we usually have areas which we expect price to pull back. Price either pulls back to a demand level in this case, because price is actually bullish. Price either pulls back into a demand level or it comes to rebalance a fair value gap. So this is what price does each time it pulls back. Now, after the pullback, you see price react to the upside again, and we have another good break of structure. After the pullback, price continues to the upside and we have a break of structure. Now, at this particular point, you see price pulls back, and after that, what can you clearly see? We have price reacting the upside again, and it breaks structure. Now, in this case, after price breaks above this higher high, we see the reversal right here, which indicates that price is shifting in structure. Now, this is the basics of smart money. Anyone that is learning or teaching you smart money concept will always start with this basis, teaching about the structure of the markets. Now, you see, let me try to indicate the structure breaks. You see, At these areas, this is where price was breaking the previous structures, which we already know that this indicates that price is going to continue to the upside. Now, when we talk about structure breaks in the markets, when you see structure breaks, this indicates that price is going to continue in the existing trend. Now, what is the existing trend? Price is bullish. Now, at this point, you see price breaking underneath the low. This is our higher low. Now, if you've been looking at what price has been doing, these lows are protected. Price has not been able to break underneath the low. But this particular low right here was actually protected, and it did its job by taking this particular high. But at this point, price breaks underneath the low, which indicates that we're going to have a possible shift in structure. This is where we can go ahead and label as a structure shift because price is shifting in this structure. Most times when I approach the market, I've had a lot of trades where I approach the market this way. So that particular video I played in the beginning where I had meeting with my students, you're going to see we approach the market where we had this kind of price action. And when we had this kind of price action, what we actually looking at first, we had a point of interest right here, which is a fresh zone. And if you look underneath the low, you equally have another point of interest. This is where you need to use what we call lower time frame structure, understanding what the lower time frame is saying to approach the markets. Let's not waste a lot of time explaining this. Let's do this on a real chart so you could understand where I'm driving to. If you look at this particular price action, what can we clearly see from here? Price is bullish. Price is reacting to the upside. And anyone that is looking at the market right now understand that price is trending to the upside. So when you see this kind of price action in the market, what is your expectation? Your expectation is that price is going to continue bullish. You're going to anticipate that price will continue pushing to the upside. Now, let's try to read the price action right here and understand exactly what price was doing at first. You can see price switched from a bearish market, and after it switched, now we have a bullish market right here. Now, when you understand what the institutions are doing in the market, it will be very easy for you to approach this particular market. And one thing I made mention of when I was explaining is that when price is printing these higher high and higher lows in a bullish market, this is where we should try to pick out the points of interest to trade from, because a lot of time when price is reacting this way in the market, you see that we have a lot of points of interest, and you as a trader, you might actually find it hard to select the specific one to trade from, the right one to trade from, because some of these points of interest might actually serve as an inducement area, which is a smart money trap. And you need to understand about smart money trap. I've made a lot of lessons on this channel talking about liquidity and inducement. These are smart money traps in the market. Now, let's read what price is actually doing. See, from this particular area, you can agree with me that price breaks above this high. And after price breaks above this high, we have this particular area and price breaks above this high once more. Now, will you agree with me that this area right here is actually a smart money trap? Because some people might actually be looking to trade from this particular low. But in this case, this is actually a smart money trap. But price comes back, sweeps the liquidity underneath the low, and it mitigates this range created demand level, and price continues to the upside. So this is why you need to have the general understanding of what price is actually doing in the markets. Now, when price reacted to the upside, we can clearly see that we probably have another good break of structure, and price retraced back inside the range. Where did price come back to? Price retraced back to the balance fair value gap. Now, when I started this lesson, I said price usually draws back to two areas. Firstly, it could be a demand level since we are bullish, and secondly, price could come back to balance a fair value gap. Now, after price rebalance the fair value gap, another good reaction to the upside, which breaks structure to the upside. So seeing this price action explains that price is bullish. So you have to keep your eyes on the market, looking for possible areas to trade from and react to the upside, another good break of structure. Now, in this case, after we had the break of structure, what can we see right here? Price comes back once again to mitigate and to respect a demand level. Now, this is my advice for you right here. When you approach the market, you have to make your choice. Either decide to trade from supply and demand levels or decide to trade from fair value gaps. These are points of interest, areas which you could decide to trade from. Now, it's left for you to make your choice, and any one of your choice, try to study deep about the particular concepts. If you decide to trade with supply and demand levels, study about them. Know how to select the good ones and the right ones. Know the ones to disregard in the market. Secondly, if you're looking to trade for fair value gaps, study about inefficiency in the market and know the particular one to stick with, okay? Now, at this particular area, what you can clearly see is that price reacts massively to the upside and it breaks structure. And this is where I usually have interest in the market. When I have this kind of reaction, you see this very large candle reacting with momentum to the upside. So if I was actually looking at price at this particular area, I will look to select a good point of interest right here, because this is actually a very good point of interest, which could actually be refined to this area. But I think when I marked that point of interest, it was looking like this. Not only that, not just selecting this particular area, you see price returns back to the area, then before it's reversed. Now, this is a smart money trap right here. Why is it a smart money trap? A lot of people might actually be paying attention to this particular area, looking to trade from here, but this is actually a trap in the market. A lot of people might actually say, oh, price reacted from there and it broke structure. Yes, price did that, but when selecting your points of interest, you need to understand where price builds liquidity in the market. Now, if you're not satisfied with this being a smart money trap, you can also see with your clear eyes that we have what we call a trend line liquidity. Now, a trend line liquidity is another form of liquidity when you're looking at the market. Now you can clearly see that this is a trend line liquidity. Price builds a trend line liquidity while it was reacting to the upside. Now price continues pushing to the upside. Remember, we have a very good point of interest down here, which we are actually looking at. But the thing is that price is yet to return back to this point of interest. Now you can agree with me that this is a break of structure. Price has continued to the upside. Now let's try to identify our structure correctly. You see this particular low pushed price at first, price spikes above the high, retrace, then prints this high. So this is a higher high. Price reacted from this low to this high. Now we have a pullback and price reacted from this low to this particular high right here. So you can agree with me that this is one leg of price and this whole range right here is a pullback. And this pullback actually came to rebalance the inefficiency we have at this particular area. I hope you can clearly see that. Looking at what price was doing, after price reacted from this particular low to this particular high, we have another pullback in the market. You see, price pulls back once again, then reacts. We have some little pullbacks before price prints this high right here. And from there, you see how price reacted massively to the downside. This is where we're having a shift in structure. When I started, I said, this is the strategy I chose. This is how I approach the market. So I'm sharing it so you can take advantage of it as well once you understand it. Now, these are market structure shifts, and where I could maybe decide to mark as my market structure shift is this particular area. This is where I could decide to label my market structure shift. But have it in mind that this is actually the first place price shifted a structure, this particular low right here. But for the purpose of this lesson, let's focus on this particular area. So we have this shift in structure. And when I was having that analysis with my VIP students, I said that they should look to approach the market at first. We identified this one, but this particular setup wasn't really complete for me when I was looking at it. I think the setup wasn't complete because it was lacking something. This setup was lacking an inducement area, which I call smart money trap. If you look at this particular area, you can clearly see that we have that inducement area, which I call smart money trap. Before price builds more liquidity in form of a trend line liquidity. Now, looking at this particular area, you see we have 2 points of interest. I think I should go ahead and delete all these price actions. So we just focus on the one we have right here and understand what price is actually doing. So let me delete all this. So this will look nice. Okay, let me mark it correctly. All right, so let me remark our trend line liquidity. You know, I don't like the T charts. I like when my chart is very neat. So this is my liquidity area. So this is the simple setup right here. You know, when I mark my setups, it looks very simple, but you need to read deep into price actions to see. Now, remember the setup we have right here meets the criteria for a valid trading opportunity. This one right here, we have a supply level, but price is yet to leave a smart money trap, because once I see this trap, it gives me the confidence to approach the market. Now we have 2 points of interest. If you listen to that record attentively, I said that if price comes back to this point of interest, this is where you could look to approach it with an entry confirmation. Let me replay it once more. This area looks good, but approaching it with an entry confirmation is going to be nice. I hope you heard that. I said if price comes back to this level, approaching it with an entry confirmation will actually be nice. Why is it nice to approach with an entry confirmation? You see, we're having a shift in structure, which is actually indicating that price would shift in its momentum. Now, approaching it aggressively will not be the best idea. Now, let's press price forward and see how price reacts to this. Now, price starts returning at least correctively, And you can clearly see that anyone that was actually paying attention to this particular level, looking to trade from this particular level, is going to lose money. You see price at first takes the low. You see how price sweeps the liquidity underneath this low, then reverse to the upside. Let's continue to press price forward. Price comes, tags into a zone. You see how price just tags into a zone and reacts. Now, this is where you have to look for your entry confirmation and have it in mind. When I share this particular setup, I said you should approach with an entry confirmation. If you want to approach with an entry confirmation, you have to drop to a lower time frame. Now, some of my students actually approach this particular trade. Some of them approach with an entry confirmation. Let me show you that. So this is one of my students. I think I've done a lesson using one of his charts. He's actually consistent. So I'm very happy with him. Now, if you look at this particular chart, okay, this particular one is Euro JPY 30 minutes time frame confirmation entry. So the particular JPY pair was actually very similar to the GBP JPY pair. That is the same, almost the same setup. But I wasn't paying attention to the EJ pair, right? Now this is the GBP JPY pair, and this is the 30 minutes time frame. Now, this is what he said when he was actually approaching it with an entry confirmation. If price close above the high, then I will take the trade. And I actually like his confidence because you can see this is what it looks like. Price was yet to close above the high. So let's look at the 30 minutes time frame and see how we can actually approach that trade with an entry confirmation. Drop into the 30 minutes time frame to see how we're going to approach this with an entry confirmation. And you can agree with me that this is exactly the same setup. You see, at this point, price was yet to close above this particular high. And when looking for your entry confirmation, what do you usually look for? Usually try to read the lower time frame structure. Now let's look at what price is doing at the lower time frame. Now, if you're looking at the lower time frame, trying to read its structure, you can agree with me that price was bullish right here, pullback, another pullback, print this high. Remember, this is where I said we had that shift in structure, but I decided to mark this low. So we had the shift in structure right here. Price prints this low. We have another pullback, which price reversed to the downside again, breaking underneath this low. So what you can clearly see that this is the high of the range and this is the low of the range. This is one leg of price. Now, after we had this one leg, we had the pullback and price react to mitigate this particular level. So this is where we had that break of the low. Now, after price breaks underneath this low, we identify it as a valid break of structure to the downside. Now, after that, you see, he said if price breaks above this high, which is actually the correct thing, this is where we're going to look to approach with an entry confirmation. But for now, we don't have any trade setup. Now, let's press price forward and see how price reacts. Now, finally, price breaks above this particular high, which confirms that we can go ahead and select our point of interest. Personally, if I'm looking at my point of interest, I'm going to select my zone this way, okay? I'm going to select the zone, but he actually refined the zone to this particular candle, and that particular student actually went for 2%. I've always seen that student. I've talked about him. Flexibility is one of my good students. I don't even know his real name, but he goes for 2%. So when he entered this trade, I think his 2% was around this particular area. But I think one thing I have to advise this guy to do is to look for more pips since he always approached the market on the lower time frame. Now, if he actually decided to enter the trade from there, holding to this particular high right here, he would have made about 13% from the market. He would have made about 13%, but he actually looked to approach the market and go for 2%. Now, let's press price forward and see how this reacts because we're actually approaching it with an entry confirmation. Now, price starts to react to the upside, and after it broke this high, which is a valid market structure shift, you see how price reacts to the upside, and now we're having the pullback. Now, have it in mind that we've gotten the confluence that is going to make this supply level a high probability one. This is where we identify here as our inducement area. Now, we have an inducement area which has improved the probability of the supply zone playing out. Now, let's see how price reacts when it gets to our points of interest. Now you see, price comes back to the point of interest, tags us in, and you see how it's reacting to the upside. So that particular student, like I said, he went for 2%. So just little reaction in the market, he actually made money and left this market within 1 hour. He's doing well, and this is actually where we're going to target in the market. Let me show you what it looks like when he took his profits. So back again, okay, this is where we had entry. So let's see where he took his profits in the market. So at this particular point, remember, this is what it looks like when he had his entry, and this is where price tags him and hits his target. So he actually got in and out of the market very quickly. And I think this is the Euro JPY setup, but this particular one actually hits his target and continues as well. So he's actually doing well, and I appreciate him. I also talked to him about that. He's doing very well in the market. Now, going back to the markets we are looking at. So price tags in and price starts to react to the upside, and have it in mind that we have the second point of interest to see how price was actually reacting to the upside. Now, if you have interest in trading once more, I think there are good areas which you would have looked to get involved, but I can clearly see that price sweeps the liquidity underneath this low, react to the upside, comes back again to mitigate the whole of this range. But if I was actually looking at this market, I would have refined my zone. So price reacts to the upside, sweeps the liquidity above this particular high, and it's approaching our second point of interest. This is actually a very good trading strategy if you decide to look at it and approach the markets with this particular strategy. Now, let me quickly introduce our mentorship. Our advanced smart money mentorship is currently running. So if you have interest in joining our mentorship or joining our inner circle, you can decide to enroll for our mentorship right now. And you can clearly see that this is what our mentorship comes with. You're going to have access to our advanced smart money course. You're going to be part of our weekly chart breakdown. That's the kind of breakdown I showed you during the beginning of the lesson, where we look to approach the market and see what price is presenting in the market. You're going to have access to our VIP support group. That is the kind of groups I've been showing you results. That means you're going to be part of our VIP support. You're going to have access to our premium possible setup. So even after you join the weekly chart breakdown, you're going to have access to the setups which you're going to be trading for the week, and you'll be part of our meetings. Okay, if we're having any meeting, you're going to be part of our meeting. So if you have interest in enrolling for a mentorship, this mentorship costs $216. This is actually a promo price, which later is going to go over to the original price, which is $320. And this is actually the payment method you can look to pay via your debit card and actually pay via cryptocurrency. And if you want to talk to me directly, you can talk to me on WhatsApp via this particular link right here. And this is actually some of the reviews from those who are part of our community. So what are you waiting for? You need mentorship. If you're actually struggling to find consistency in the market, you need to enroll for this mentorship. But if you're actually doing fine, you can look to disregard that. But if you just want to be under someone's guidance, enrolling for mentorship don't necessarily mean you're not doing well in the market. There are people who are doing well already before they join our mentorship, and there are people who are struggling. They just need someone who's going to guide them, and as well enroll for the mentorship. But if you think maybe this is not what you can afford, you can stick to the YouTube community. I'm actually sharing great content right here. This is the current price after we had our entry from this particular level, and you see how price is approaching our supply level. Now, one thing you have to know in the market is that price will not always present confirmation entry in the market. So there was actually a time when I don't enter the market if I don't see confirmation entry, but I did few adjustments. Now price is approaching this particular supply level. Now this is where you can actually decide to get involved in the market as well. Now playing price forward. Price tags us in. If you're actually approaching with aggressive method, price tags you in. But if you're looking to approach maybe with an entry confirmation, I don't think price actually presented that, because if you try to read the lower time frame structure, you see price breaks above this high and prints this high. We have a pullback. Let me use this one. Price prints this high. This is the pullback, prints the higher high. Here's the pullback, and this is the higher high. So this is where we have the lower time frame shift on the 30 minutes time frame. So if you're looking to approach with an entry confirmation, this is where you're going to look to get involved. Firstly, you can decide to maybe enter from this tiny zone, which a lot of people might actually patronize. And if you try to measure this particular zone, this is actually a very little zone, which is about 36 pips. And some people might actually decide to take the whole of the range. So if you're approaching from the whole of the range, this is where you see that this zone is about 80 pips. So these are good zones, but I don't think price came back for mitigation. Let's press price forward to see. Now price moves away without actually coming back for mitigation, and this is where price is currently at, today being the 3rd October. So this is a recent price action. So this is how I approach the markets. This is how I visit the markets and trade in the financial markets. And personally, I want you to take advantage of these trading concepts. This is how I approach the markets day to day, understanding what price is doing across different time frames, understanding the order flow of the market, understanding institutional sentiments. So if you have questions, you can go ahead and ask in the comment section. And like as always, when I teach my trading strategies, what I advise you do is you should go back to your price chart and practice. Every single thing you've seen me explain in this particular lesson, you can't master it if you don't practice. So go back to your price chart and practice. So thanks very much for watching this particular lesson. If you have interest in joining our free Telegram community, we have a free Telegram community. You can go ahead and check the link in description. The link is right there. And if you want to talk to me directly, I have the link to my WhatsApp on the description as well. You can text me, and if you need more information about our mentorship, you can go ahead and talk to me. Okay, so thanks very much for watching this particular lesson. See you in the next lesson.